we are about ready to enter what we used to call earnings season. I will say used to because it's doubtful that a backward-looking indicator going back 3 months is going to matter a whole lot, given that the last month of that quarter pretty much saw the greatest single-handed slowdown in the history of the American economy. However, we have to pay more attention, perhaps I would imagine, Dan Nathan, to what companies like the banks are seeing right now and saying about the future. What are you looking for?
Yeah, I mean, listen, I think that the other panelists are going to have a lot more constructive things to say about the banks, their earnings power, how they're positioned into this crisis. This is not a banking crisis like the financial crisis from 12 years ago. But I think it's worth noting that last year, the last time there was a bout of volatility in the bank stocks was when the 210 U.S. Treasury yield curve inverted last summer. And, you know, that obviously portends some difficult times for the economy. We know that that has preceded almost every recession prior. We're going to be in a recession now. I'll just make the one point, though. When you go back to the financial crisis, that yield curve inverted in 2006, and it started going up pretty steadily in 08, 09, just as bank stocks were crashing. Bank stocks now in this crisis right here are some of the hardest hit stocks. And what are we seeing? We're starting to see that yield curve after it inverted last summer. It's kind of widening out again. So to me, that should not mean that bank stocks are out of the woods, and a lot of their businesses are very, very exposed to some of the industries that are very impaired. And I would just say that we are very early on in this economic crisis. So the color that we get from banks, I suspect, is going to be somewhat disappointing, and it's not going to be, we're not going to see a ton of visibility on the earnings front either.
Yeah, I do wonder, listen, Karen, we know that things are slowing down on Main Street. I don't know about you guys at Metropolitan, but everybody I know on Wall Street, despite having to go through all these hurdles working from home and slow computer connections, whatever, seems to be pretty busy. Volumes are up. The markets were dislocated, but that means there's opportunities. What are you closely most watching when it comes to the banks?
Well, for me, it's all about credit quality. I agree with you. Trading revenues will probably be, and capital markets revenues will probably be pretty good, but it's really all about credit. And as you said, you know, the March quarter doesn't really matter. And companies could make it through March, even ones that won't make it through the next quarter, survive those 3 weeks of March that they had to get to the finish line of the first quarter. To me, it's all about credit quality and really having some sense of how badly this balance sheet, even though it's very, very well capitalized, how badly it's going to get hit. And I don't know that they have visibility yet. So one thing that's been focused on a lot is, will the banks continue to pay dividends? And JP Morgan has paid out about 30-ish% of their earnings in dividends. So the rest they use for buybacks, and then they build their book value. But I don't know if they will feel comfortable paying out all of their earnings. Let's say their earnings get crushed by 2/3. I don't know if they would feel comfortable using the last third to pay out dividends. And I don't know that they'll have clarity yet on that. That's going to be something I really want to hear. I mean, I'm glad also that Jamie Dimon is back. That's great. We need him right now. But I want to hear what he has to say about the economy. And also, the Fed really did them a favor with looking to buy every type of security, because as much as they have loans, they also have other securities as well. That helps the banks. But to me, it's much more important than the net interest margin or their trading revenue or what's happened in their asset wealth business. It's just about credit quality.
And Tim, listen, I'm not trying to be glib when I say this. I mean, I think that there's going to be, and you said it earlier, and I'm kind of summarizing you, there's going to be a lot of CEOs and CFOs who come out and say, our earnings were terrible, and we really don't know what's going to happen. And that's, I think, going to summarize a lot of the guidance that we are unfortunately going to get.
Yeah, I think Jamie Dimon, who's been pretty sober of late on some of the comments, and he's always been such a thoughtful, kind of rational folk here. I think you've got a question where, as Karen said, net interest income doesn't matter. The revolving loan and in fact, there's been runaway issuance, so they're making a lot of money in capital markets right now. But I care about credit, and I don't think we have an insight into that credit horizon in the short term.
All right, Tim Seymour, earnings season, like it or not, is certainly upon us coming up.